You're listening to the 10 Bagger Podcast, presented by The Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Roy-Byrne.
Hey everybody, welcome back to the 10 Bagger Podcast. I believe this is episode number 23 or 24. I didn't check, but I think it's one of those. With me is returning guest, one of my favorites, one of your favorites, Nick Germain. He goes by the moniker MiningBookGuy. You can find him at MiningBookGuy.com. He also has a YouTube channel where he shows some videos that has lengthy and detailed research on the companies that he's following. Nick, it's a pleasure to have you back. How are you today?
Oh, I'm great. No, thanks, Jordan. And for first time I've been on in I think a couple years now, so it's really great to be back.
So, Nick, today you're going to give us a 10-bagger pick, and you're going to talk a lot about Africa and why you like Africa and how you do your research. And first off, before you get into the details of Africa, why do you prefer to look at Africa as a jurisdiction rather than the typical favorites in North America?
Yeah, so I think Africa it's such a huge and diverse place, and I always like to tell people, there's this big delta between perception and reality, and I think it's bigger in Africa than anywhere else. Now, what's exciting is that is starting to change. And not necessarily in the share price, but I have seen a lot more retail investors, particularly from North America, over the last 5 or 6 years, realize that ounces in the ground in Africa, maybe they shouldn't be worth as much as in the US or Canada, but they should be worth a lot more. And they're also realizing that it's much quicker to go from discovery to development to production, and that's something that I would say consistently is better in Africa than elsewhere. But maybe the kicker right now is I think Africa is really set up to be one of the best places in the gold space for lots of M&A and lots of emerging mid-tiers. And that's, maybe it's been set up that way for a few years now, but I think that's really coming to fruition now.
Let's get this question out of the way, because if you look at the news in a lot of these places, every week it seems like there's a government that's being overthrown, and that worries a lot of investors. It worries a lot of people that these companies will be unable to operate there, or the governments are corrupt, or they'll steal the mines. If someone, as I just did, pose this question to you, who is considering looking at Africa, but this is a real holdup for them, I mean, how do you respond?
Oh, it's a fascinating question, and we could have like a whole conversation just on it, but I'll try to simplify it a bit in terms of what has happened in the last year or two and why it is a complex state. We have 3 countries in West Africa that I'm aware of that have had coups, I think in the last 6 to 9 months, Burkina Faso, Mali, and Guinea. And even though there was some disruption, it's amazing how the mines have continued to work and a lot of exploration has continued. And part of it is that there are established mines there, and gold, and I think in all 3 of those countries is one of the most important commodities. So the people that come in for the takeover or taking over the government, they realize that that they need to continue. They need the gold mines to continue, for things to work out. And maybe it's better they don't change the mining codes. Now, that's not to say that things might not change for the worse in the future, but those are examples of countries that are working now. But if you look at a place like Ethiopia, that's currently in a terrible civil war, and you look at Sudan, which has had its own coup, personally, I find both of those to be much riskier. Now, things might get better, but I think part of it is that there's less establishment of mines right now. There are very few in both of those countries, It's more complex than that, but it's to say you really need to look at each individual country on its own. And I guess just going back to West Africa in particular just has more of a history of these mines and of companies doing well just despite all of the turbulence. So there's no simple answer for it, but I just gave a few examples that go both directions, and you really it's good to try to stay on top of this, but it's amazing how resilient some of the mining companies are in countries that have had problems.
Just to follow up on that, because I know people talk about this in the U.S. and Latin America. I mean, operating in Nevada is much different than operating in California, for example. Are there like pockets within some of these countries that are much better or much worse? Or is it a situation where if you're in a certain country, it's pretty much the same wherever you are inside of that country?
That's a good question as well. I would say that there are definitely examples where certain regions are much better or much worse than others, but usually it's a different reason for what you see in the U.S. or Canada, where it might be a mining code type issue or a legal type issue, while in Africa, I think there's a tendency for it to be more based on terrorism, where Burkina Faso, some places you just can't operate at all, while others are fine, like they're very secure. Or Ethiopia, where specifically Tigray in the north, where a lot of the exploration is going, or what seemed to be the safest place is actually the most dangerous, and you just can't do anything there. And I think you can do stuff in other parts of Ethiopia. So it's again complex to look at each individual situation, but it's definitely there, and I think it's important as an investor to have that awareness of the different regions.
Okay, let me put you on the spot here. Two-part question, and this doesn't have to be a long answer, but for you, what are the best one or two jurisdictions within Africa? And then secondly, can you name a country or two in Africa that you think is really going to emerge as a prospective or a much safer jurisdiction in the coming years?
Ooh, it is a little bit on the spot, and there's a lot that I like. So right now, I mean, easy for me to say that my favorite two jurisdictions would be Namibia and Botswana. There's just been this history of stability. Now, I think you can make an argument that both jurisdictions maybe have gone a little worse over the years, but there's still democratic elections. I think it's been decades and decades since there's been any type of serious issue, with electing a new president and with, codes being fairly stable. So to me, those are kind of head and shoulders above others in terms of countries that have established mining. Now, in terms of emerging, I personally like to say Senegal is going through it right now. But I would say in terms of West Africa, what I've really enjoyed seeing over the last 4 or 5 years is that shift in where Burkina maybe had its time 10 years ago as like the best emerging place, but now Burkina's had issues. It's still working, but I think Senegal and Ivory Coast have kind of like moved up in that area and are still moving up. So those are the ones I focused a lot of time on over the last few years, and it's been nice to see. But definitely Namibia, Botswana, I think are the top ones.
And then what the second part, a jurisdiction or two within Africa that you think is emerging that's more prospective, or maybe it could become a lot better in general over the coming years?
Okay. Oh yeah. Sorry. I guess looking ahead a little bit more. I think I would have to say like one that I wouldn't be surprised a few years from now, like Egypt, to really stand out. I mean, I still have some hesitation in terms of how close it is, to the Middle East and all that, but there's a lot of rumblings in terms of, Egypt. I think a big part of it being an improved mining code. And some names have popped up there. That's one to be on the lookout for. That maybe a lot of people haven't even thought of, since there's so few juniors or seniors that are known there.
Okay, shifting gears, another question before we get into some company talk. Historically or in recent years within Africa, are the 10 baggers or the things that have been close to being 10 baggers, do they tend to, are the examples, are they spread out through, explorers, developers, and producers, or is it easier? Is one of those categories produce more 10 baggers than the other? I know that you like to look for explorers, but if we're looking at that range there, exploration, production, development, is there one that's more likely to produce a 10 bagger in Africa, or is it just kind of all spread out?
I think it's fairly spread out, and I think there is something for everyone. I personally like to find the classic grassroots greenfields discovery, try to get in that early stage, and then hope for the M&A, by the time you get towards development, before production. But there's plenty of examples of companies that have gone through, from development to financing to production as a single asset, and then they merge with someone else or buy someone else out, and then they become the emerging mid-tier, and then they end up becoming even a senior company. And probably the best example of that is Randgold, which just basically started as making its own discoveries, and you could say it actually moved up the food chain and became Barrick Gold because Mark Bristow was a geologist, and now he runs Barrick. So that company in itself really shows you the huge move. So it's there's something for everyone depending on what your own focus of expertise is.
Yeah, I don't know if you have any comments on this, but I remember, as someone who likes to look for growth-oriented producers, I remember coming out of the '08 bottom, I forget, but there were a couple of junior producers in Africa that, of course, they got obliterated during the GFC, but then they just came back and made massive moves on the other side. And it's interesting because we haven't, I talk about gold not being in a real bull market. Yes, gold did have a decent move from 2018 to 2020, but you had the COVID crash in there. We have not been, it's been a long time since we've been in a period where gold has had this sustained move higher over the next, or over beyond a 2-year period. And if later this year we get a real breakout where the market, carries to 3,000 and beyond over the next couple of years, I think that could really benefit producers, at least junior producers in Africa. I know this is kind of outside of what you normally look at, but do you have any thoughts on that and how a bull market could that increase M&A and make junior producers in Africa more attractive, or has it also been an issue of there just haven't been a lot of these companies out there and they've been taken over before they have a chance to grow into multi-asset companies? I don't know if you have any thoughts on that long spiel.
No, I do. I think I can give a couple case studies. Looking back, even though I wasn't around in 2008, 2009, 2010, one great example from back then was Semifo, which eventually got bought out by Endeavor. But I think they had the Mana Mine. They had maybe a few other assets, but it was a very high grade open pit mine in Burkina, and it was a huge winner. I know there were a lot of institutions that got into that, and eventually it started to grow further from there. But if we fast forward a little bit and go from looking not just from 2008, 2009, but then going through the next cycle to 2014, 15, 16, two companies that went from development to financing and construction, and then became producers are West African Gold, which is WAF, which was dual listed for a period of time, but now it's just ASX, and then Rox Gold, which has recently been bought out by Fortuna Silver Mines. And I think looking at those, they were both great 10 baggers where I think you solidified the 10 bagger gains after a roller coaster of going through those cycles. They became very profitable single asset producers. So from there, that's where do companies go? WAF is still a single asset producer and is consolidated. They bought some stranded assets in Burkina from B2Gold and are kind of a powerhouse, but are they going to buy someone else and or merge with someone else? And then Roxgold, it seemed like they were on their way to being a multi asset producer just in West Africa, but they got bought by Fortuna Silver Mines, which was really surprising because that was bringing a Latin American silver company with a gold company in West Africa. I actually think that arguably might have slowed down some M&A at that time. So this is going through those as case studies. I think there is a chance for more Roxgolds, Semifos, and West African resources to show up where you have single asset producers that maybe merge with each other, and they could quickly go from a fairly small producer to maybe a 500,000 ounce to million ounce production in the future, because I think there's a big gap in that area right now. There just aren't that many companies. Perseus is one that's done really well and kind of fits at that 500,000 ounce level. But I think that's what we're going to see. And as you correctly mentioned, going into a bull market, you can have some really big winners there. It's not what I mainly focus on, but I think we'll see that. I think it's going to be pretty exciting.
Okay, now let's talk about the coming M&A in Africa, because I know you have a lot of thoughts on this. Why you think Africa is headed into or is currently in a position for M&A that's much different than, say, 3 or 5 years ago?
Yes, so there are so many relatively small, and I shouldn't say relatively small, I just say, so many tier 2, we could even say tier 2/tier 3 deposits, like deposits that are probably going to be nice economic deposits, and they could grow, but at the moment, they could range from 50,000 ounce per year production to 150 or 200,000 ounce per year production. But there's so many of them, not just in West Africa, but in other parts of Africa as well. And I don't think there's a concentration of these companies anywhere else in the world. And as I mentioned earlier, they're fairly easy to bring forward, in terms of permitting. People want to see them go forward. Like in Latin America, there's been so much more pushback recently, which has surprised some people, but it's just goes to show that there are benefits in Africa compared to much of Latin America or other developing parts of the world. And so I think a lot of discoveries have also been made and are growing, but we're going to see these 1, 2, 3 million ounce deposits. We're going to see them all starting to merge and fill in that gap that I mentioned where, historically it's been a really great place for having, 500,000 ounce per year production profiles. And so, you merge a few of these together, like, a 200,000 ounce per year producer with a couple 150,000 ounce per year producers. And all of a sudden you have this nice company. And I guess just as a side note, there's so many other, because of the jurisdiction issues elsewhere, that are real issues. We've seen some companies get absolutely killed because of permitting or other things in safer parts of the world. We've seen the resiliency despite terrorism. If terrorism is the worst thing you have going on, or terrorism or coups, they're both pretty bad. But if you see those things going on and you still see the mines working and you still see the money coming through, then people start to pay attention. They're like, hey, maybe I actually want a mid-tier that's only focused in Africa, like as kind of a pure play, and I don't have to worry about the weird other stuff going on in other parts of the world that I used to think were safer. So hopefully that answered the question a bit, but I think we're kind of coming to that stage where all of a sudden, a lot of African companies get re-rated and there's a lot more excitement for the mergers and acquisitions there.
So do you think with the coming M&A, there could be some majors, or are we just going to see lots of companies that are producing 500, 600, 7,000? I mean, I know it's hard to predict, but what's your sense of how it could play out there?
I think Randgold is the model. Like before Randgold merged with Barrick, or I guess was bought by Barrick, we could call it a merger, and now it's a super senior. Randgold was a senior on the smaller side. And so what Endeavor Mining has done is that I think they've wanted to be the next Randgold. And good for them. Unfortunately, I think they haven't been rewarded by for a lot of their M&A, but I think they're well above 1 million ounces now, and so they are a senior. In a weird way, I think they're one of the reasons this kind of this slowed down the smaller style M&A. But I think everyone would aspire to get there. But to get to 1 million ounces, you got to get to 500,000 first. And I think there's a lot of room to be rewarded for being a company that goes from maybe a single asset 100 to 200,000 ounce production profile to 500,000. And if you think about it, I mean, anybody can just think about the basic math. If you're going from 100,000 to 500,000, that's like a 5 times increase in your production profile. Well, if you're at 1 million, how hard is it to get from 1 million to 2 million? And you can, and that's good. But then if you're at 3 or 4 million, like how do you even get bigger? And that's a problem that Newmont and Barrick has. So I think that's something worth thinking about. Africa is a great place to combine all these tier 2 projects and to go from that 100 to 200 to 500,000. I think that's going to be very appealing. And we're going to see a bunch of those. Some of those may end up getting to 1 million plus. But again, I think we're at that stage where these 100 to 200,000 ounce per year go to 500,000. And there's going to be some big rewards for some of the companies that succeed with those mergers and acquisitions.
And by the way, because I love growth-oriented producers, I just pulled up the Endeavor mining chart because I remember their success. That it appears that went from below $5, maybe $4 at the very beginning of 2015, and it peaked just below $40 at the summer 2020 peak. So, I mean, if you bought that in 2015, you made it not at the low. I mean, that's a 7 or an 8 bagger. Yeah, you had to wait a few more years than a few years, but I mean, that's another example of a near 10 bagger just through M&A and doing it. And I'd say at the right point in the cycle, but well, yeah, I mean, it wasn't the right point in the cycle. Gold did nearly double at that point in time. But yeah, that's another example, I think, that as you were talking about earlier. But, moving on from that, let's talk about exploration. Let's talk about a company you're following. I believe you mentioned this company last time, but, my memory right now is not that great. Why don't you talk about one specific company that you're looking at now?
Okay, so I have to mention Chester Resources, CHZ on the ASX. I mean, funny enough, I reviewed our previous interview, Jordan, over 2 years ago. That was my pick. So, that was the official first pick for the 10-bagger report. And it's really interesting because at the time it was, I think, 7 cents. This is a small explorer in Senegal. And I can kind of remember how the stock moved around. I think they were building on a discovery. It went as high as 11, 12 cents. Then March 2020 happened. They got absolutely clobbered, went down to 4.5 cents. I mean, had to raise money at the absolute worst time. And they did. And then they made an amazing discovery, went as high as 32 cents, I think. And now they're all the way back to 10 cents. So I know you had Rick Rule on a previous interview, and you talked about all, the best 10 baggers or his best wins have had these huge drawdowns. I mean, this was a really severe drawdowns before and after various discoveries. But this, when I try to think about all the different plays in Africa, this one really, really stands out because Barrick Gold is making a discovery next door. Like they highlight it in their quarterlies, which I've been following for a couple years now. And as I mentioned earlier, Senegal still it's not as much on the radars as it should be, and partially because there's just so few juniors there. So they're the only junior with this great land making their own discoveries next to Barrick's discoveries. I think it's very likely there could be 5 to 10 million ounces there. But this company is, despite all the discoveries, it's trading close to where it was trading 2.5 years ago. So I've traded it a bit, but for the first time in a long time, it's become my largest position. And I've, been averaging down on it. And that's, I don't think you hear about it from too many other people, but I'll just add with Senegal, Endeavor bought Teranga Gold, or they kind of merged and became the senior in West Africa because not just because of the quality of the asset in Senegal, which is on a different geological area of Senegal, but to show the market that they had lower perceived risk because they had so many mines in Burkina. So to me, that was another signal that Senegal is looked at as one of the emerging places in West Africa. But I haven't seen any retail investors talk about that, again, because there's so few companies in Senegal. I have seen more people talking about Ivory Coast, but I think going back to the beginning of our conversation, that fits into perception versus reality. I think there's so many things in the favor of Senegal kind of standing out. And with Barrick there and with, Chesser making this high grade near surface discovery, that's probably going to be part of M&A, whether it's with Barrick or with a smaller company like Silvercore, which is this, a Chinese silver company that has invested in them, bought share. They own 6% of it, bought it on the market. One way or another, it's going to get consolidated. So that is my top pick right now for still being a potential 10-bagger. But we'll see. We'll see. There's a lot of other very high quality African plays out there.
Yeah, let me follow up. What's the current market cap and how much cash do they have right now?
It's about a 46 million market cap. I think 460 million shares at about 10 cents, and they have about 5 million in cash. So they will have to raise money probably within a few months. That's my guess. But there's some really exciting news coming before then. Usually I don't get excited by scoping studies, but I have a good feeling this is going to be a relatively low capex, high NPV, which I think is something everybody should be aware of. I mean, in a rising gold market, sometimes, the big CapEx companies still really do well, but that's why you want to see high NPV, low CapEx, and they're also building a new discovery. So they're advancing a smallish high grade project, but it's in the process of growing. And again, Barrick's making discoveries next door to it.
And that market cap is in Australian dollars, which it's I don't want to say it's like monopoly money compared to the U.S. dollar because it's not. But I mean, if that must be in the 300s, if we're converting to U.S. dollars. In the 30s. I'm sorry, I got confused.
Yeah. In the 30s, and I mean, I personally can't believe it. I understand why some people just pass on things because they don't like the chart. Or they're very sure a capital raise is coming and like you can wait on it. But in this particular case, I think there is really exciting news that could absolutely re-rate it and kind of supercharge the stock. And the truth is, when this went from 10 cents to 30 cents on the last discovery, nobody I knew really wanted it, unless they were following me. It wasn't talked about much. So this is the best feeling I've had about this stock since that time. Though again, there's been a big roller coaster, and there probably will continue. So I think that's a great lesson to have. For many of the 10 baggers in the mining space, you got to be ready to ride the volatility, or make volatility your friend.
Yeah, just one more follow-up on that. So I looked up their resource, so it looks like it's just under 800,000 ounces. So for this to be a 10-bagger, do you think they have to get like 2 to 3 million ounces? I mean, obviously, if they doubled the resource and showed really strong economics, which it looks like they will, in a strong gold market, that's going to make a huge run. But, is that to be a 10-bagger? Does it have to get 2 million ounces or plus 2 million ounces? What do you think?
Oh, no, it's a good question, Jordan. Definitely 2 million plus. Now, I'm not saying like this is some guaranteed 10-bagger. I actually think there's a very high chance it would be a 4 or 5-bagger. If they ended up getting to something like 2 million ounces and showing future growth. It's not all ounces are equal. These are high margin, near surface ounces, really good geometry to the deposit. So it would potentially be combined with some of the other discoveries nearby, whether that's Barrick. IAMGOLD has a mine to the south. I think someone might combine it. But to get to that 10-bagger, it's not necessarily defining all the ounces. I personally have a high confidence that they are going to continue to make more discoveries while the resources increase, and that's something I like to see in plays that are moving forward. Not just that you're upgrading what you already have, but you keep making new material discoveries. And so it's very possible that to get to that 10-bagger level, Chesser maybe has defined closer to 2 million ounces, but there's some other new discovery that's happening that is showing it will eventually be more than that. But then Barrick also is in the same process, and we don't even know what Barrick has. But if Barrick, has made 3 to 5 million ounces next door, they're going to pay a huge premium to buy Chesser to ultimately, if they think that ultimately those two properties together are going to reach 10 million ounces and then get to a Barrick-sized project, which would be 500,000 ounce per year production over 10 years. I think that is completely ignored by the market right now. And so it's not that Chesser on its own needs to get to 10 million ounces, but they just have to show that, hey, we are a piece of the puzzle for the next tier one mine in West Africa. And there's very few projects that have that potential. And that's why Barrick has been talking about it so much in their quarterlies.
Yeah, I mean, before we wrap this up, I would think if they got to 2 million ounces and, could hypothetically, you could have a plus 150,000 ounce a year mine with really high margins. I mean, that is a significant amount of cash flow. When you have high margin ounces, you get to around 2 million ounces. That makes a huge difference, even for a senior. Or am I wrong about that?
I'm glad you brought that up, Jordan, because there are very few. There's a lot of very good deposits in West Africa, and a lot of them, might have a gram per ton or a gram and a half per ton, which is very good. But once you start getting to 2 grams per ton, 2.5, 3 grams, and you have it right from surface, and you have the right geometry, you start taking away, you start filtering out various projects. And Chesser basically has the best on all of those aspects except for the scale. And so the more they show that the potential scale is larger, the more people realize, hey, this is a super high margin deposit that is going to be worth more than any other deposits out there that are 2 million ounces. And I don't want to get into the weeds too much, but that is just something you pick up over time. It's not just about the pure number of ounces. It's how close are they to the surface? What's the metallurgy? What's is it going to fit well into an open pit, or is it going to be a good underground? Because some deposits they fit better, but you want all those pieces to come together. And I think Chesser is a true standout in that respect.
Well, Nick, thanks so much for the info. Really fantastic. Before we end here, can you tell our listeners if they want to follow you, how they can do so?
Yeah, so I have a little website I haven't updated for a few years, but if you go to MiningBookGuy.com, you can sign up for my email list, and that's where you'll get my best info. I think I just sent an email out on average once every month or two. But you can also follow me on Twitter, CEO.ca, and there's older videos on my YouTube channel. So there's a lot of ways to follow me, but MiningBookGuy.com, sign up for my free email list if you want to see some of my better ideas early on.
Nick, thanks so much for coming on. Great analysis. We love it, and look forward to having you back again soon.
Thanks, Jordan. It's been great to catch up with you.
Thank you for listening to the 10 Bagger Podcast, presented by The Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.